Chances are you've heard about this, but I haven't seen anything on the news that told the whole truth, so I did the math. Hi, I'm Chuck Vosberg from Next Home Gulf to Bay. Along with my wife Pat, we're your favorite realtors, and you've undoubtedly heard about the new mortgage penalty for people who are low-risk borrowers. And the way it breaks down is if you're a low-risk borrower, you're going to pay up to a 1% penalty to help subsidize the up to 2% discount that high-risk borrowers are going to get. Now, of course, the government's made it complicated by having this whole chart. I'll put it up here on the screen just so you can see it. But let me give you a good example of this. And this is one that is a little more real world. Now, the government's telling everybody that with a $400,000 loan, it's only going to cost about $40 extra a month for those people that are having to pay this surcharge. It's just $40. Well, it's not true. And the news media has been reporting this and just repeating it over and over again. We heard this $40 thing. Well, I sat down and did the math. So let me give you a couple of examples here. The first example I'm going to give you is somebody who's got reasonably good credit. They've saved up for a 20% down payment, and with a $400,000 loan, their monthly payment is going to be, the way it was, $2,398 a month. But as of today, that's going to go up to $2,661. That's a difference of $263, not $40 that's being reported. That's $263, and this is on a very typical buyer. And here where Pat and I live, a $400,000 home, that's about an average house. Now, for the high-risk borrower, let me give you the numbers on that. The way it was before, $2,822 a month. But now it's going to be $2,357 a month because of, in my example here, the 1.75% discount that they're going to get. So that's a difference of $465 in their case. So the extra money that the person who has good credit goes towards the high risk. And the theory that the government has here is that, well, that's going to kind of offset the risk that the lenders have to take by taking on these high-risk borrowers. And it doesn't make any sense to me. There's in no way, no logical fashion can you consider this fair. So the way it works is the people who have made good financial decisions, paid their bills on time, saved up their down payment, are actually going to get penalized to help pay for people who have made poor financial decisions, didn't save up for an adequate down payment, and are much higher risk. It's exactly the opposite of what makes sense. So I could get on a soapbox about this and talk about it for hours, but I think you know where I stand on this. There's no way that it's fair. There's no way that it makes any business sense. And I think it's going to fail. This is the kind of thing that happens when the government gets involved in the free market. Think back to before 2008. The government started forcing lenders to take on higher risk loans. And that wasn't the only reason for the real estate crash, but it was a big reason for it. And I believe that this is going to lead to more foreclosures, more financial ruin for people. People who don't have enough money now are going to be more broke later because of this. We're actually doing them a huge disservice. So not everybody's ready to buy a house. And the best way to be ready to buy a house is to get ready. So having programs where you can raise your credit, save money, these are the kind of things that homeowners need. Because allowing somebody who can barely scrape by to get into a house is actually setting them up for failure. So that's my opinion on this. I'd love to hear what you have to say. Put it in the comments. What do you say? And I appreciate you watching. If you have any questions or if you need anything, let us know. We'll tell you anything you want to know. No strings attached. We put humans over houses. So thanks again for watching. I hope you're having a great day, and see you next time. Bye-bye.